Okay, I think I'm live now. It's always hard to tell because there's a delay. All right, there we go. Hard to tell because there's a delay. Okay, now I hear myself. That's how you know it's real.
All right. It's live when you
Yeah,
when you
it is
see
live. It
problem.
is live. Okay. All right. Hello, everyone. This is Aaron Yoon from iFlip Invest, and I'd like to welcome you all to the very first episode of iFlip Mailbag, where we answer all of your questions. You can literally ask us anything you'd like. Keep it related to personal finance, please, and investing and trading and that kind of stuff. But yeah, we'll answer all of your questions. This is kind of like a supplement to some of you who are already big fans of the AI Circle. This is in addition to that. We'll be streaming every second Wednesday of the month, and the AI Circles will continue to be every fourth Wednesday of the month. Thank you for joining us for our very first mailbag episode. And of course, we have my co-host, Lee Gearhart. Welcome, Lee.
Thank you. Excited.
Yeah, you excited to get on this? You ready for our
Absolutely.
first question?
Yeah. Let me
Okay.
share screen. This is
Yeah.
awesome. You already kind of said it, but I'm excited to give people two different points of the month that they're able to get questions answered. They don't have to wait till next month when it might be irrelevant.
Yeah, exactly. Exactly.
So,
Before I get into this first question, everyone, I do want to mention that nothing we say here is advice. Okay. We're neither Lee nor we don't have licenses. We're not licensed financial advisors or anything like that. So we're not actually legally authorized to give you any kind of advice and recommendations. However, we do want to create a safe space for us to engage with all of you. To let's face it, finance, investing, trading, all inflation, all this kind of stuff can get really dry really fast. And we really want to create a safe place for you to have an engaging, fun conversation, because if you have fun while learning something, you tend to retain it a little bit better, right? At least that works. That's how it works for me. So we want to have some fun with everybody here and address some very common questions, and frankly, a lot of questions that get are kind of like there's a lot of misinformation spread about a lot of these types of questions. So our first question for today is it better to be sitting on cash during a period of inflation? It's a very relevant question these days. Lee, what are your thoughts?
yeah, I mean, I think you'll obviously have something to say about this as well. And while we're here, we might not always have the exact same perspective. So it'll be nice to have two different sources of information or opinions to go along with this. And I think we'll see that through the remainder of especially the first episode, but many to come. But in my opinion, my perspective, I mean, having cash just sitting there doing nothing is suboptimal. Let's be honest. In my opinion, you always want your money to be working for you. That's why we have things like IRAs and investment accounts. Quite frankly, if we want our money to sit in cash and do nothing, we'd just have it sit at a bank. But we all know that that's not the ideal way to go about things. And I'm also putting a little bit of my opinion on this question as well. It's just saying, is it better to be sitting in cash? There's nothing really to compare it to. Is it better to be sitting on cash than, say, being invested in the stock market? Or is it better to be in cash versus going and buying some real estate? So, I mean, from a black and white perspective, it's a no doubter to me. You want your money to be invested. Now, especially, and I think why this is such a great question is that we're in a very unique year in 2022 where inflation, quite frankly, is some of the biggest that I know some people have seen in their lifetime, others maybe not. But the pickle that you're in, if you will, is, and I'll use the stock market example. Would you rather have your money sitting in cash, or would you rather have it working for you even in this inflationary period? And as we've seen so far this year, last I checked, the market was somewhere down right around 14 or 15% for the year. So cash, it's not sounding as bad as it, typically might. Would you rather be sitting in cash, having your money do nothing for you, or would you like to have, and obviously this is the looking back view, but would you have rather had that money working for you the whole year and also be worth, a lot less than it was when you initially started? So not only are you losing out on the buying power due to inflation of your dollar, but you're also losing out, quite frankly, on however many dollars you got invested. It's very likely you don't have that exact same amount right now where we stand.
Yeah, no, I couldn't have put it better myself. The only thing that I would add is, and maybe double down on, is that inflation, at least in America, has always been something that is working against you. And in fact, it's almost like the modern way that the government and the Fed taxes you, because inflation has been rising faster and faster. I'm sure you all recognize this by now. In the past, post 2000, in the internet age, inflation has gone up faster than the 20 years prior to that, and even 50 years prior to that, because we got off of the gold standard, and that really just opened the floodgates, because that allowed the Fed and America essentially to just start printing dollars as much as they wanted, which made them very loose with their cash, government spending, let's say. So inflation is always something that you're going to be battling against. But Lee has a really, really good point. This particular question doesn't really ask like, better than what? Like, it's better, you're always fighting against it, but it's not better than losing money in the stock market, right? You always want to be gaining, not losing. So in this particular case, from a trader's perspective, I'm always paying attention to what the rate is, kind of like, and what we expect it to be, and looking for opportunities to grow our money faster than it, or at least keep up with it if it's just too scary out there. However, if that's not a skill or a conversation that that you're really comfortable having yet, then maybe it is, it's the lesser of two evils to just lose buying power to inflation than lose, like some people have done, like lose 90% of their savings in crypto. Like, it's better to just stay in cash than do that, So it really kind of depends on your situation. But if you're just too scared, sitting on the sidelines is okay, right? Until you're confident in the investment that you do want to make. Lee, anything else you want to add?
The only thing I would add to that, obviously, you and I are both, associated with iFlip, in a little bit different capacities, but we obviously really believe in our software and what it can do. And the nice thing about it is that you don't have to make that decision. Is it a right time to be invested in the market? Should I be sitting in cash? It does it all automatically for you. So I know I have a great deal of confidence in that, and whatever the AI is doing for me, I know it's going to make a better, if not, it's definitely going to make better decisions than I personally would. And I think some of the questions we have in the future here are going to lead into our opinions and our emotions of investing and trading.
Yeah, for sure. Okay, so the question really is for all of you watching: how do you feel about inflation? Drop down in the comments section below and leave us a question, a follow-up question to this, or a comment on how you deal with inflation. Do you like to get extra aggressive, or do you like to sit on the sidelines? Let us know in the comment section below. Leave your thoughts there. Let's move on to the next question, Lee. So our next question is, how much of my income should I be investing? Lee, what are your thoughts?
Absolutely. So, and this is a very personal one. It's impossible for me to say, well, I could make the opposite argument as well, but if I said, hey, you should invest, $5,000 of your income every single year, that might be extremely easy for one person to do, and next to impossible for someone else. So we also have to kind of qualify that. And while we're on the dollars topic, just in case you guys don't know out there are contribution maximums that you can make. And I'm, again, taking this more in the IRA route, but you're allowed to contribute $6,000, at least in the year 2022. It was the same in 2021, I believe, as well. You can contribute up to $6,000 each year to an IRA. And that's if you're under 50 years old. If you're over 50, you actually get an additional $1,000 that you can invest each year. So that'd be seven. But what I would say is to have a plan. I think, and I'm going to mess up the saying, so I'm not even going to try to say it. But if you're going about something and you don't have a plan, you're like, what are you even doing? And I'm paraphrasing a lot, but in my opinion, I'm a very plan-oriented person, so it's easy for me to say that. But at the same time, you have to have a plan. Whether it's, and to somewhat correlate to the last question about inflation, say you put, I don't know, 10% of your income each year or each month into an investment account, whether that's an IRA or not. That 10% might be easy to do now, but as inflation creeps up and the cost of goods that you're typically, spending day by day and just in your daily lives, if those increase, then you might not be able to invest as much. So I would just say have a plan and do your best to stick to it. There's always going to be certain things that are going to make it more challenging than others, but I don't know many people that have had just an extremely easy life. And I don't think there's a ton else to say about that. Again, I wanted to take this slightly out of context and just allow people to understand, if they didn't already, that there are maximums to IRAs. There's a whole nother rabbit hole we could go down with IRAs that we won't today. But that's just my opinion, I guess.
Yeah, no, I'm totally right there with you on this one. We got to find some questions where we're actually going to disagree. Otherwise, people are going to think we're just always singing Kumbaya over here. But no, for this one, I'm right there with you, man. The way that I like to, and I have to be careful about this. I don't want to again get into the area of giving advice, right? That's not what I'm here to do. But if you really understand how the law works in terms of taxes and what you're subject to, what you're qualified for, what you're not qualified for, what makes sense to me for the average person making less than $125,000 a year is you got to max out your Roth, right? That's the first milestone you got to hit. Maxing out your Roth IRA, which currently for 2022 contributions is $6,000 a year. That's what Lee was talking about. You got to max that out first, which if you do the math, turns out to be $500 a month. So I like to keep things simple. I'm a lazy guy by nature, so I like simple stuff. So until I can hit the point personally, right, managing my savings and expenditures and my rent, my car, all that kind of stuff, and until I'm at the point where I can hit $500 monthly contribution to my Roth IRA, I'm not really looking at anything else. I'm not really ready to trade options and Forex and get into all this risky behavior. Unfortunately, the reality is, especially with internet marketing the way that it is now, most people do the opposite. Most people are like, oh, $500 a month. Let me go sign up for this online course where I could turn $50 into $50,000 in 4 seconds. Let me do that, right? And I'm exaggerating, obviously, to make a point. I think that there's so much of that temptation out there that we get enamored with it. I'll be the first to admit that I've been caught up in that. But fortunately, I was also kind of raised in this kind of like hedge fund world, this iFlip world, where I got a lot of good advice or good mentors to follow, good models to follow before I got even exposed to any of that get rich quick stuff. So I kind of was able to, resist the temptation better than most. But I think that's the first milestone you gotta hit. And to keep things simple, don't even look at anything else until you can do that. And fortunately, one of the best places to open a Roth is iFlip, because we're gonna leverage cash as a position. We'll get into all of that in a little bit, but with iFlip, you're able to avoid market crashes like Neo dodges bullets in the Matrix. Like we've been doing it for 5 years now. 3 crashes, we've dodged every single one of them. You want that for your Roth, for your long-term growth. It'll compound drastically better by doing it that way. Lee, do you have anything else you want to add to that?
I think the nail's been hit pretty hard, but just the last thing, I mean, I would add in the importance of what Aaron is talking about, maxing out an IRA if you can. You just can't make up for lost time in those. Like we've talked about, there's, maximums you can put in every year. You can't, wait 5 years from now and say, hey, I've got a lot of money now. I'm going to put 50K into my IRA. It doesn't work like that. So that's why we talked about having the plan. We talked about putting, taking care of your retirement first. You might have heard people say pay yourself first as well. So I mean that's about it. But yeah, you're right. We do need to find a question we can disagree on, so we're not just sitting on the same side of the fence.
Yeah, we'll have to be a little bit more. So the challenges for everybody out there. Put some questions or comments below in the comment section below for anything that you think Lee and I might disagree on, right? That might be one of the challenges over there. But in all seriousness, if you have any kind of follow-up questions or any kind of comments about how you decide how much of your income you dedicate for your investment account, please let us know. We'd love to hear your thoughts. Let's move on to the next question.
Perfect.
Okay, so similar to the previous questions, kind of a good segue. Should I pick my own stocks? If so, how should I decide? If not, how should I vet the person who will be handling my investment? This is a kind of a three-part question, Lee.
Yeah.
What are your thoughts here?
Yeah. Well, I mean, I have a unique perspective in that I'm not trying to make this all about iFlip, but I've been associated with the company since I was pretty young. So I've really never had the need to go and hire someone to manage my money. I mean, in theory, I've hired the AI to, manage my investments for me, and I wholeheartedly believe in it, and that's why I practice what I preach. But at the same time, that doesn't mean that I don't pick my own stocks. I don't do it too often. I wouldn't say that it's for the typical person, it's probably not wise to put their whole IRA or their whole personal account and just manually trade it. Historically, we've seen us as humans are not very good traders. I forget the exact number, but it's like 90-something% of people that trade don't make money. So, I mean, from that perspective, I'd be a little bit cautious, but I mean, I've had some trades that went very, very well. I'm currently in one that's not doing very well. And as a result, I'm forced to hold on to this stock until it gets back, around where I sold it, or at least hope that it goes, that it comes back to where I bought it at, and hopefully it does get there at some point. But again, back to the last question about having a plan, I think you have to, and you might touch on this as well, Aaron, but you have to have a plan. If you're just buying something and praying that it's going to go, a certain way, then I'm not sure you have much of a plan, to be honest.
Yeah, no. I mean, the first thing that I see when I hear like, should I pick my own stocks? The first response and follow-up question that I have is, well, based on what, right? Because I don't think anyone just chooses their own stocks randomly. I think everybody, even professionals, have a research area, right? They do some research that influences their decision. It's not like picking a number in roulette, although that is how some people do it. And funnily enough, there have been cases where I'm sure you've seen like TV shows where they're like, oh, this cat picks random stocks just randomly, right? And it outperforms the professionals, right? Because it does sometimes feel like pure luck. It does sometimes feel like playing roulette. But I think for the most part, even professionals, they base their picks on some form of research. So the question is, where are you doing your research? If you're doing your research from the latest meme stock that's trending, right? Like AMC or GameStop in, what was it, last year or 2 years ago? I forget exactly when they were trending, or the latest crypto. Remember when Dogecoin was supposed to go to $3? I'm still waiting for that, right? If that's the premise of your research and your stock picks, your crypto picks, then maybe that game isn't the best one you should be playing. I've been saying this, and I said this during our crypto masterclass. that we had in January and February, this is not a dabbling kind of game. The art of stock picking, the art of trading, and all of that kind of stuff, the art of navigating the financial markets to make profit is basically like playing a professional sport against professional league players. So if you're not ready to go up against Goldman Sachs, JP Morgan, and you're not really aware that that's who you're up against, and you have to be ready for that, then it isn't you have a 97% chance, like Lee said, of losing money and letting them take your money. So that's why people who have experienced that want to leave it to somebody else. I don't know. The first thing that I would ask to answer that last part of the question, how do I vet the person who will be handling my investment, is I would first check if they're a licensed certified financial planner or one of those licenses, because while that might seem like a symbol of credibility, to me it's actually a red flag, because the nature of how they're trained is they're trained to, when the market is doing what it's doing right now, which is going down, they're trained to stop you from exiting your positions, because the way they make their living is they make a percentage of the money you have exposed in the market. So in other words, unless you're in the market and losing, they don't get paid. So it's in their best interest, and they don't tell you this, but it is the reality of it. It's in their best interest to make you stay in the market and lose. I don't like that. That's a red flag to me. That's why, to me, iFlip is a very good, probably the best that I've seen. It's the best alternative, is that they're actually going to automatically exit. They're not going to check with me. They're not going to ask me, hey, we think the market's going to go down. Do you want us to sell out? No, I don't have time for that. Just sell it, and I'll just deal with it later, right? And for the most part, for the big moves, for the big crashes, it's been right on the money. For the little ones, you could argue either way, but for the big ones, we've had crashes in 2018, fourth quarter 2018, the COVID crash in 2020, and the crash we're experiencing right now. We're in the middle of a correction right now. iFlip has dodged them all again, like Neo in the Matrix. So I'm like, all right, that's 3 for 3, right? And continuing the sports analogy, if you're 3 for 3, I'm going to give you, in any sport, right, I'm going to give you the benefit of the doubt for the next one as well. So I think this is a really good spot for most people who are iffy. I do also think that, if you want to get educated, this is also a really good place to get educated. We're actually having an event in Dallas in October. I hope everyone here already knows about that. We've been talking about it a lot. And that's a really good place to determine and learn for yourself, hey, am I cut out for this game of stock picking? Do I have what it takes? I don't really know. It's a good place to find out. So we hope to see you all in Dallas. Lee, anything to add?
Yeah, you not even alluded, but you also said it, and I don't think it can be emphasized enough. But if, not to make it sound like it's this uphill battle that's impossible, but I mean, if you take the majority of people on the planet, to make another sports reference, to compete with, say, Steph Curry on a free throw competition, that's at some point kind of what it feels like when you're trading on your own. And don't get me wrong, there are people that might beat him, and there are traders that I know that are very, very good, but it's also the time investment that they make in picking, the things that they invest into, that you have to be prepared for if you're going to pick your own stocks. I think if you don't want to spend the time on it, then it's most likely not for you.
Yeah. Well, the question is for all of you watching at home. Do you pick your own stocks, or do you let someone else do it? Do you subscribe to a newsletter that gives you picks, or are you a iFlip subscriber that just lets the AI do it all for you? Whichever category you fall into, please let us know your thoughts in the comment section below. Let's move on to the next question.
I think this is our last one, if I can count to 4.
Yeah, I think so. I know we only had a handful. We're getting there. So I think it's a good follow-up question to the previous one. How do I know when to sell? Lee, what do you think?
Yeah, I'm glad we saved this one for last. I feel like it's the $1 million question.
Yeah, right.
I'm not so sure I have $1 million answer for it, but I mean, if you're going to, manually, I use the term manually, but if you're going to buy and sell anything, quite frankly, on your own, again, it does go back to having a plan. And why I say it's the $1 million question, I think if anyone knew it, then they'd be doing pretty dang good, and some people do. But at the same time, it's a, I don't want to say a guess, but a calculated decision, if you will, as to when's the best time to sell. I mean, as it relates to us and iFlip, we're never going to claim to sell at the exact top and buy at the exact bottom. We make the market prove itself to an extent there, and we play in the middle, 80 to 90%, I would say. So again, it's not, I said I don't really have the $1 million answer here, but I also know that I have the resource that does it all for me. So I don't have to worry about, is it the right time to sell? Is it not? Again, back to my trades that I've done myself, there's been a few that I mean, looking back, I probably just got lucky and I sold them at a good time. And there were other ones on the flip side where, gosh, I bought that at a terrible time and I'm still probably paying for it at the same time. So you might have I know you're a little bit more of a trader than I am, so you might have a little bit different perspective on this, but love to hear your thoughts on, when you decide to sell and what it's based upon.
Oh, for sure, for sure. Just buy low, sell high. Done. Next question.
Right?
I mean, why are we complicating this? No, obviously easier said than done, and I'm just kidding. Traditional wisdom, I guess, would tell you, sell, don't sell until you need it, until you actually need that money decades later, right? That's the traditional kind of financial wisdom that mainstream media and our parents have kind of instilled in us, right? Just keep putting money away, ignore the market going down, just keep dollar cost averaging and all that. Just keep putting money. It doesn't matter that you're losing today, you're going to make it back tomorrow in the next 10 years and whatnot. Don't sell ever. And that is, I think, going back to the financial advisor example that I gave before, is the industry makes money off of you behaving that way. That doesn't mean that it's the best possible behavior, right? Like I look at the health industry, right? For a long time, I mean, it's all over the place nowadays, but for a long time, carbs were good and fat was evil. So we saw all these like low fat kinds of things trending in like sugar and like low fat sugar and all that kind of stuff. Nowadays, it's like, oh, it's okay. Fats are good, like avocados and stuff is good. It's carbs that are evil. We're like, which one is it, right? It kind of depends on what we're being programmed with the industry that kind of leads this, that kind of leads the ship, right? For the most part, the financial industry has always sang the same tune, right? Never sell because I make money that way. And you will, whether you win or lose, doesn't matter, right? You'll find out over decades, you'll probably end up winning. So yeah, I'm helping you out by telling you that. Now, the reality of it is you can, while that's kind of true, you can take buys and sells along the way, which is what iFlip does very well. Like I said, 3 for 3 in market corrections. But I don't want to kind of misquote iFlip in saying that it nailed the top and it nailed the bottom every time. We just got pretty close. And what we've done is we've done the math and we realized, this is another thing that Randy talks about in his presentation. That's really cool. Mainstream, like traditional wisdom is also that, hey, timing the market doesn't work, because if you miss the 10 best days in the market over a 10-year span, it's like you miss out on the majority of the gains. Okay. And that's where most financial gurus stop there. What they don't add is that if you also miss the 10 worst days, then you would do way better than buy and hold whatever get you. They don't say that because then that's not good for them, right? But iFlip says that because that's the whole truth, and we're able to deliver that for you automatically. So that's why we've been able to do that. But again, we've not nailed the tops and bottoms automatically, like to the very, very tippy top and the very, very tippy bottom. We've just gotten pretty close. And missing the I've gotten complaints that iFlip kind of sucks because the market was at all-time highs in January of 2020 and we were out of the market. Do you remember that, Lee?
Oh yeah.
Right.
This
it was
thing
right.
doesn't work.
Yeah, they're like, your software is broken, right? This is before the COVID pandemic, before the shutdown, before the crash. Market is at all-time highs. Our president back then is beating his chest saying he's the best president ever because look at how great the stock market is doing. And we're out of the market the entire month. I got so much backlash being like, your software, you guys don't know what you're doing. The market's at all-time highs. How could you be out of the market? Give me a refund, et cetera, et cetera. Lee, do you hear stuff like that as well?
Oh yeah, absolutely.
And then the market crashed and we were still out of the market. All of a sudden, 4 weeks later, we're a freaking genius, right? We're like, oh my God, how did you know that the world was going to end? Right? How did you predict the COVID crash? We're like, we didn't. The AI saw that this is risky mathematically, statistically, ask Kelly the details. I don't know the details, but it determined it was too risky to stay in. So it got out without asking too many questions, without getting caught up in the hype like most people did. And it just sold, right? So, and then it bought very near the bottom, right? It bought a little bit too early. It wasn't the actual bottom, but it was pretty close. But all that is to illustrate that the best time to sell is when you have mathematical, non-emotional proof and evidence to support it. Or when you actually need the money, which is a kind of a more long-term kind of question. After you've multiplied your account over many times over a span of decades, then yeah, you can sell when you need it. Short term, you got to have some kind of plan. You got to have some kind of mathematical rule-based system for how you exit, and that can vary greatly. And if you want to learn some of those things, the best place to learn that is in Dallas in October 20th to 21st. In Dallas, Texas. We have the registration link in the description below. Click the link below and you can join us and you can learn some of those strategies of how you can exit trades and investments without really having to stress out about it. Okay. But the real question is for all of you, how do you determine when you get out of an investment, and has it been working for you? If it's been working for you, I'd love to hear. I'm a trader. I'm a nerd about these things. I'd love to hear all of your success stories and your system, because I'm always willing to learn as well. Leave your thoughts and comments below. And let's move on to I think we have a bonus question from, yes. So this question is actually what I'm asking a lot of you folks to do right now, which is leave a comment below, because we do look at all of them. Right now, our YouTube channel is still in its infancy, and we are able to literally look and respond to every single comment that you guys post. And this one is just a really good example of that. This comes from Jorge, who says, I'm completely new to iFlip. In fact, I'm trying to decide if it's legit, if it's for me, et cetera, et cetera. Then I see you talking about manual trading and it confused me. I can totally empathize with that. If Kelly is often wrong, right? We said that in the last AI circle. If Kelly's often wrong compared to iFlip's algorithm, why would we want to manually trade? And of course, I actually reply to this in the YouTube comments, but we can also use it as an opportunity to talk about it live on the Mailbag show. So I already commented to Jorge here. Lee, do you have any thoughts on what you would say to Jorge?
Yeah, I'll just take this as, information, if you will, for the general public out there about what we do and where the confusion is, because I can, just like Aaron said, I can empathize with Jorge as to maybe being confused. So obviously our value add to the customer is the do it for you approach, if you will. Let the AI decide when it's the right time to buy and sell. But as Aaron and I have both said, we'll make a trade here and there, and you can do that on our platform as well. So it's more of a complementary feature. We're not a Robinhood, a free platform just to trade, and we're not going to necessarily give you any tools to aid in your success, but if you want to trade, go for it. That's not at all what we're trying to do. It's more of, trust the AI. If you like it, great. If you want to make a trade here and there on your own as well, feel free to. You can kind of do it all on the same platform, quite frankly. And that's really all I wanted to touch on for the comment. But Jorge, we appreciate the comment. Like Aaron said,
Yeah.
we'll be able to look at them all. It's exciting to see the channel growing and various social media platforms that we have growing. And but the one good thing about being in the stage that we are, at least online right now, is that we can get to everyone. So please comment below. I like to hear what people have to say. I like to hear the questions that they're having, and just like you heard back in school, raise your hand, ask the question. I'm sure other people are thinking it as well. So it'll give us good insight as to what we should be covering in future episodes.
No, thank you so much, Jorge, for the question. And more or less, what I said as a reply is, think of it like driving, right? Some people, like the most common car out there still is just the automatic transmission car, where you don't shift gears by yourself. The car does it for you, right? And you have your foot on the gas, your hands on the wheel. So it's automatic transmission, right? But nowadays we have also the Tesla self-driving vehicles, which is really, really cool. And that's kind of like what iFlip is, right? It's a self-driving investment vehicle. It'll go and stop without asking you. It'll just do it by itself because it does it really well. It's tested and proven. However, there are still some people like me that like manual transmission cars, right? They like the old school muscle race car or something, right? They want the clutch on the left. They want they want to shift. Well, a lot of cars have it as a button now on the steering wheel, but they want the stick shift, in the middle as well. Like, some people still want that, right? And a lot of those types of people come on to the AI circle because guess what? Kelly is one of the best manual traders, right? Or manual drivers in this analogy out there ever, right? So, and you get to just show up to YouTube and pick his brain for free, right? Where else do you get that? Not that many places. Not from a former institutional trader who managed $4 billion, right? Not at that level. You got to pay to be in a trading room like that, but we offer Kelly once a month for free. So a lot of manual traders show up to the AI circle and ask manual trading kinds of questions. And I think that's where maybe Jorge, who is clearly, he even replied, he said, yeah, iFlip seems to be a better fit for me. Thanks for the clarification. I want a self-driving vehicle. Thanks for the clarification. But that's where I think Jorge got mixed up, because there's a lot of manual drivers that show up to the AI circle with a lot of their questions. So hopefully that addresses that. And if you had a similar thought or question like Jorge did, feel free to comment below. I think if the best way to do it is if you have a relevant question to that particular topic that we just covered in the video, leave a comment, because it's very pertinent and related, and we'll get to it, right? We can probably get to it faster than whenever the next episode of Mailbag airs. But if you have a separate question that you want us to dedicate a whole segment to, then I think we can. Do we have the slide up for the email address? Yes. You can submit your questions to mailbag@iflipinvest.com. Just email us there. Leah and I will both see it. Any question is okay, as long as it's appropriate. Don't get too personal now. But I do trade myself. I do trade Forex and futures, and I'm starting to learn a little bit of options. It's been a struggle because it's very foreign to me still. But if you have questions about that kind of stuff, if you have questions about the event, then I'll probably be the one to answer it on the next episode. Anything more general about, just personal finance and investing, Lee can handle those as well. And yeah, we would just love to hear from you. So please submit all of your questions to mailbag@iflipinvest.com. Lee, do you have anything to add before we wrap?
Yeah, just to add on to what you already said, but like a lot of the questions we went over, we were also, putting our opinion on what the question actually was. So, like for instance, the first one is better to be sitting on cash during inflation, as we said, better compared to what? If you have a specific question, would I rather be invested or what should I be invested? Should I be in real estate? Should I be in the stock market or should I be sitting in cash? Something more specific, we're happy to answer those as well. And I'm only giving one example, but a lot of those questions can be taken so many different ways, and you might want an answer in a slightly different way or slightly related to something else. So as we've said, we're open to pretty much all questions. I'm excited to, again, as I've already said, to see what you guys are thinking out there, what kind of questions you're having. And quite frankly, I always learn something doing this as well. So
Yeah, no, yeah. I mean, I'm from the bottom of my heart. Please ask us anything that you like, because it actually helps me learn to talk about it too. So just like, yeah, just echoing what Lee is saying, for sure. I appreciate every single question and comment that we get. And I'd love to see more. But again, once I have to remind everybody, this is not advice. This is just our opinions. We had to add our own interpretations to certain parts of the question to even answer them. Again, only from our own opinions. None of this is advice. This doesn't mean you should or shouldn't do anything. This is just a safe place for us to have a productive and fun conversation. So hope that was a good episode for everybody. Hope you learned something and you got something out of that. Please join us again for Mailbag, second Wednesday of every month, for the AI Circle, fourth Wednesday of every month. That's in a couple of weeks. So for now, we will sign off and say good night. We'll see you on the next one. Good night, everybody. Okay.